Good morning, everyone. Thank you for coming. We are here to focus on the issue at hand, which is the impact of loan moratorium to the individual, small and medium-sized enterprise, business, and bank during this COVID-19 pandemic.
As we all know, this COVID-19 pandemic is an ongoing pandemic of coronavirus disease since 2019, which was identified in December 2019 in Wuhan, China. This virus was confirmed to have reached Malaysia in late January 2020. This gives a large impact to the Malaysia economy and financially.
Despite the challenges we are all facing now due to COVID-19, we can still find purpose in our lives and be supportive of one another. I heard that the Malaysia government has approached Bank Negara Malaysia and the Association of Bank in Malaysia during this COVID-19 pandemic.
Yes, the loan moratorium.
What is loan moratorium?
Loan moratorium is a deferment of loan or payment of the loan. The moratorium period is a temporary deferment of individual obligation on paying its loan. During this period, individual who fulfill the requirement of loan moratorium does not need to pay the loan apply without any penalty such as payment charge.
How does it work?
The loan moratorium in Malaysia happened during pandemic period start at 1 April 2020 until 30 September 2020. All Malaysian citizens which qualify to the loan moratorium does not need to apply for the loan moratorium because the loan moratorium will be automatically and the bank will notify the borrower about the deferment period. This loan moratorium gives us impact to the individual, small and medium business and bank during the COVID-19 pandemic.
From my point of view, this loan moratorium is helping by giving sufficient time to the debtor in managing their funds, income, and money during the suspension.
Why do you say so?
I do think this moratorium is a good alternative to help the debtor in managing their fund in this hectic situation because, this sudden outbreak of COVID-19 has affected billions of people around the world, including in Malaysia, mentally, physically, and even financially.
I see your point, but doesn't that can affect the flow of currency in bank industries as well as the economic growth?
I personally think that this loan moratorium is a good implementation because the government is concerned about the debtors' situation, and the debtors should not be pressured to pay their debt or loan due to the COVID-19 has affected many parties, including SME. If the loan moratorium is not being implemented, it will likely cause the bankruptcy rate to increase in Malaysia. Therefore, I think this loan moratorium is helping the debtor to handle their financial effectively and give them time to adjust and adapt to the new norms.
I think so too. In fact, loan moratorium giving relief to the low-income individual.
But may I know why?
This can be said because during the pandemic period, many individuals lost their job because the MCO period also forced some unnecessary organizations to shut down their operation, which result to many individuals lost their source of income. But without loan moratorium, individuals which lost their income have to pay for the loan apply, and if the borrower failed to pay for it, the borrower have to face some penalty. Therefore, loan moratorium can help the low-income borrower on its tight financial situation.
I'm afraid I don't see eye to eye with both of you. This loan moratorium can lead to bankruptcy to the individual, small and medium enterprise business if it was implemented.
I'm not sure if I understand what you are saying. Can you explain it more, please?
What I mean is, if the loan moratorium has ended and not being extended, borrowers may face serious financial issues such as bankruptcy. Although loan moratorium sounds good since borrowers do not need to make any repayment during the deferment period, the interest charges will continue to grow since interest on loan is not waived. With the mergers of interest, both the principal and prior interest balance will be applied for interest by the bank.
How will that lead to bankrupt to individual, small and medium business?
This will make a high accrued interest when the deferment ends, which may create a sudden burden for the borrower on their financial position. Moreover, the loan period may increase. This means Borrowers have to pay more interest when they use the loan moratorium service.
I agree with you. Apart from affecting the individual, small and medium businesses, this loan moratorium is also affecting the bank.
Why does this loan moratorium affect the bank?
The bank will have liquidity risks. Bank will face high risk due to the borrower who are unable to pay bank their loan after the loan moratorium ends and automatically affects the bank's profit.
This is an interesting perspective. Can you explain it more?
Yes, the liquidity coverage ratio of banks would decrease substantially more by issuing the moratorium since banks will still need working capital to keep on paying for interest costs, full deposit withdrawals, repay debt and retain their overheads. Moreover, the deferment of the loan will have an effect on the cash flow of the bank since payments from their borrowers will not be made until 6 months later.
What if the borrower encounter when making the repayment?
When borrowers tend to encounter repayment or payment restriction after the expiration of the 6 months blanket moratorium, default rates will begin to appear on the balance sheet of banks and will be presented as higher impact provision for loans or credit costs. And that is how it gives liquidity risk to the bank.
Now I am understand, and I also agree that this loan moratorium gives bad impacts too.
Maybe this bad impact of loan moratorium can be reduced since it gives high impact towards Malaysian during this COVID-19 pandemic.
I suggest that the borrowers should make repayment even they have applied the loan moratorium.
What do you mean? The borrowers that have applied the loan moratorium can be excluded from repayment.
What I mean is that the borrowers need to do repayment to the bank so that the bank can have least impact from the liquidity risk. The borrower only need to make a repayment of 30% from their monthly repayment amount.
How about the interest rate and the loan period? Does it still remain the same?
The bank need to make an agreement with the borrowers for this 30% repayment. The loan borrowed will still have the same interest rate. The only thing that changed is the loan repayment period. The loan repayment period should be extended more so that the borrower has time to make a full repayment, and it depends on how much loan they borrowed.
The bank also should have consideration with the borrowers, as during this pandemic, some of them are unemployed.
Yes, the bank should give an exception to those who are less fortunate. The borrowers should contact the bank and ask for exception.
How about the interest rate and loan repayment period for them?
For those who are less fortunate, the repayment will continue when the loan moratorium is over or the pandemic is over, but the interest rate will be higher for them, and the loan repayment period will stay the same.
Yes, I agree. So the borrowers need to make a choice whether to choose making a 30% repayment or have an exception with a higher interest rate.
I agree with you too, and I also suggest that the bank should have a collaboration with other companies to help the debtor in paying their debt in easy way and automatically reduce the COVID-19 transmission.
What company that the bank can do collaboration with during this pandemic?
As we all know, the COVID-19 is a dangerous disease, and at this point only adhering to SOP and current instruction from Minister of Health can help in reducing the COVID-19 transmission. Therefore, I am at the opinion that the bank should have a collaboration with fintech.
I'm sorry, but what is fintech?
Fintech is an emerging industry that uses technology to improve the activity in finance that aims to compete the traditional financial services in delivering financial services such as Boost, Touch and Go, GrabPay, and many more. This collaboration would help the borrower to repay their debt and loan in a convenient way, and the debtor does not need go to the bank, and this would help in reducing the COVID-19 transmission.
The suggestion is acceptable to me. This can help in reducing the COVID-19 outbreak.
That's right. Well, after listening to all the impacts on the loan moratorium, whether it is good or bad, I think it is time for us to make a conclusion.
Thank you for your suggestions in reducing the bad impact of the loan moratorium. This will help both borrowers and the bank in reducing their risk during this pandemic. Both of the pros and cons of the loan moratorium need to be noticed whether the borrower sees it in a good or bad way.
Does anyone have anything else to say? Otherwise, we shall end this discussion here.
No.
Okay, thank you for a fruitful and interesting discussion.